Welcome to today's AMA with Contango. Contango's been around for a while, actually, but they've gotten on my radar more recently by having interesting strategies where you can leverage up some things that I have really wanted to be leveraging up in the past few whiles. Things like LRTs and things like Athena. You can leverage up both the points and actually the yield. And so the yield leveraging might be kind of interesting, but the point leveraging, maybe we're a little bit burnt out about it, but we should still know about all of our options in this points leveraging arena, in my opinion. And if there's some real yield on the table, I'd also like to know what it is and see how we can interact with it. We see a lot of these max ROEs being in the really enticing range of 67%, 58%, 98%. So we're going to definitely talk about those, what ROE means, how we can contextualize it, how we can compare it to APRs and APYs. But first, let me allow Contango to introduce himself, because today we are joined by, it looks like, a number of members of the team. I will let you guys introduce yourself in whatever order you would like. And thanks for joining us.
Thanks for hosting. Yeah, we have two people from the team today. Myself, my name is Kamel. I'm one of the co-founder at Contango, and we also have Mitch on the call, who is on the business side.
Hey guys.
And Mitch. And I've just seen Bruno joining, who is also a co-founder, more on the tech side.
Fantastic. So we have a couple co-founders and people on the technical side, which will be great when we get to maybe some of the more technical questions. By the way, as always, if you guys have questions throughout the AMA, put them in the chat and I'll make sure they get answered by the end. So I want to dive into these things because that's where like my brain is focused. But before we do that, let me allow you guys to give a high level overview of what Contango is before we dive into the strategies and we just get to nerd out about numbers. So what is Contango? What is its goal? What is its purpose? And where are you guys now sort of on your roadmap to whatever your final goal is?
All right, so in a nutshell, Contango lets you loop anything on chain. You can have, for example, all this looping on LST or LRT with those Pando strategies, for example. You could also loop rate differential. I guess the most famous one at the moment is this SUSDCE DAI pair from Athena, Maker, Spark, and on Morpho. Or you can also build perps by looping any base and quote currency that we offer. We're currently integrated with around 12 or 13 money markets, and we are on 6 chains. Maybe I can go further on what a loop is, but
we know, yeah, I think we know mostly what loops are. At least, yeah. Most people who will be watching this video later on or who are in here right now, the basic idea of having, you know, an interest-bearing asset as collateral, borrowing a non-interest-bearing asset typically, and then converting that to the interest-bearing asset, adding as collateral, and then repeating that process over and over and over again to get a leverage on that interest for the collateral. Typically, that's how we're familiar with loops. Is the looping mechanism on Contango any different?
It depends where you loop, right? But usually when you loop through money markets.
Yes.
And yeah, so you could also have different sources of yield thanks to Contango. It could be like definitely like this difference of interest rate, as you just explained, but it could also come from the tokens that you receive from the underlying money market. Could also be from the incentives from the money market, for example, the former ARB incentives or OP incentive, and we still see some on some protocols. And it could also be in form of points.
Look, guys, I made Bitcoin bullish. Woo! Sorry. Yeah. Okay. So there is point there's point yield, there's arbitrum like stip rewards, there's OP incentive packages. These can all add to the principal collateral yield. Also, sometimes you get paid for borrowing. These are all sort of like exotic or interesting ways to get additional gains on whatever you're doing with your leverage. You mentioned that like there's these perps that can also somehow be integrated into looping, or like anyone can go and create a perp. Can you explain sort of what the perp aspect of Contango is or does?
Of course, if I take a very simple pair like ETH USDC, and you're trying to go long, let's say on a perp protocol, what you're doing is like you're putting some collateral, you want to gain some leverage, and you open a long position. You can do exactly the same thing with Contango, for example, built on top of Aave. What you do is like you can bring the quote or the base currency. So let's say for this example, you bring some USDC, you're borrowing more USDC on Aave, and then you swap USDC for ETH, and then you're landing this ETH back on the money market. So in this case, on Aave. Doing that, you could have like a 5x position, leverage 5. And this is exactly the same cash flow that you would get from a long per position and another per
Oh,
platform.
okay. So this is effectively just literally using the actual manual form of old school leveraging, but representing it as a modern, intuitive form of perp. But it's not. Would that be a perp contract or just like? Because I thought a perpetual contract was not actual leverage. It was like a contract that represented the leverage, whereas this is literally you're doing the leverage. It's just a really friendly user interface.
Yeah, exactly.
Okay, this is fascinating. Go ahead.
When you look at Contango, you look at it from, if you look at it from a perp angle, you will see a trading interface is like a chart with your
Right.
open position where you
Yeah,
can
yeah.
see a transaction history. You can modify your position, close your position, open a position in different instrument. Like really it looks and feels like a perp trading platform, but the
Right.
underlying is on money markets, and there's
Yeah.
no solvency issue or anything as other
Right.
perp.
Yeah. So there's also presumably you're only ever paying interest rates from the underlying protocol at leverage. You're never going to be getting paid a funding rate because there's no need for a funding rate. There's no market price for these perps. It's literally just the actual index price or on-chain oracle.
Yeah, so that's the real interesting thing about Contango is like indeed there is no funding mechanism to try to have like long space shorts or the inverse. It's really the differential between the lending and borrowing rate depending on the leverage you take. And the very interesting aspect is that we did some academical research on the matter, and you definitely pay much less fees by trading on Contango through the interest rate differential that you would do on the funding rates. You can take like stuff like even we're cheaper than Binance or DYDX. Like even DYDX on average is like 5x cheaper, and your funding rates are much less volatile. So there are
Hold up
definitely
a
some
second, because
advantages
that's a
to
pretty
trade
bold
perps
claim.
this way.
Let me see. We follow these things pretty closely, so let me see how if we can vet that. Because 5x cheaper than DYDX. Let's look at ETH. Right now, ETH is paying you 10% on DYDX to be short. Now, if you wanted to go long, then you're paying 10% per leverage, right? So if you're going like 5x long, you're effectively paying 50% on your collateral. And I do agree that would be pretty expensive. And you're saying here, if I was going 5x long ETH USDC, how would I know what my effective interest rate is?
Yeah, so if you go right now on the app on Contango, can I share my screen or?
Oh yeah. Oh, I am on Contango. Can you see? I'm up there. If you click, sometimes like you have to click around on Discord to see, but I am streaming right now. Did you find it?
Yeah. Of
okay,
course.
Awesome.
I think the easiest way is to use like this advanced trade selection. Can you click on this next to the buy button on the left? Yes. So here you're trying, so you take ETH correlated as a base, and then you take USD correlated as a quote.
USD
Yes.
stablecoin?
You got it. Yeah.
This is cool.
And now
All right.
then you take the side to go long.
Side
On
long.
the first, yes.
Oh,
Exactly.
neat. So this
See,
aggregates all the different money markets. That's fascinating.
Yeah, click just outside the box to just
I am
like,
clicking outside.
this drop down.
Oh, like up here? Okay, there we go. Got it.
Okay, cool. So you see they're pretty amazing stuff. So for example, instead of going long ETH USDC, like the first choice, what you can do is to go long the PT and
Right. So you have like a fixed rate yield built into your long. Okay, so this says main. Yeah, go ahead.
100%. All right.
Right.
Like, it's not even you pay. It's like you get paid.
Right.
However, I have to disclaim that the issue may be the liquidity because everybody wants to go long on that. But now if you take, I don't know, the second one on Aave, for example.
This one here, V3?
On Aave V3.
RETH?
Yeah, or even the third one, I think it's directly in Arrowy, right? So here we have already done the math that you've done by going on leverage 5 times 10% makes 50%. You pay 50%, and here with
I think 50% is what? Is that 80% LTV? 80% LTV is because it's 1 minus 0.8 divided by 1. So I'm pretty sure that's 80% would be 5x leverage, right?
I think the easiest one is click on
optimism. That's percentage over leverage, not LTV.
Oh, this isn't this. Oh, okay.
Yeah, because not every money market has the same LTV, so comparing them would be difficult. So what you're saying there is like I want to use 80% of the leverage. So that's more.
Okay, so is this 80% of the max LTV of the protocol?
Correct.
Okay, cool, awesome, love it. That's actually pretty intuitive. Okay, so you're saying that if I like already put to 5,
I think if I can drive you, just click on the third column, like this AVV3 minus 4%. Like the second line, third column.
AVV3 minus.
Sorry.
I'm getting there.
Second line.
1, 2, 3, 4. Second line.
Yes. And 1, 2, 3, 4, 5, 6 column where it's showing the minus 4.6%.
Got it. Optimism, negative 4%. Okay.
Click there, and you see it's updated on the right. So you can see like.
Okay, so at 3x leverage, it's negative 6. That's great because on 3x leverage on DYDX, which I was showing over here. Can you guys see my spreadsheet now?
Yeah.
Okay, awesome. So on this spreadsheet, at DYDX you're right, you're paying 10% to per leverage, right? Per multiple leverage on your long. So if you were to go 3x long, you can just do long leverage here. You're literally paying negative 25% on whatever principal you have, which is terrible. So negative 25%. I mean, it's not terrible. It's actually, not that bad, but like negative 25% versus only paying negative 6.3%. This is objectively better. Absolutely. However, what is the risk of liquidation here? Like, is there anywhere where it tells me how far? This is okay. Liquidation buffer. Cool. So this liquidation buffer effectively says that I have a 9.9% price change. I'm imagining in ETH before I get liquidated. Is that right? Oh yeah, liquidation price. Actually, this is really intuitive. Cool. So right here. So the benefit, you pay less for leverage. The detriment, you're probably at higher risk of liquidation because of the mechanism here.
Yeah, so that's super interesting what you're saying. So yes, like the maintenance margin is lower on the usual perp DEX compared to Contango. And this limitation comes from the underlying money market because the liquidation LTV is quite tight. Is like, for example, the max LTV is, like 3x, I think it's 83, even less. It's less than 80%, I think. When you go to 5x, it's like 85%.
Yeah.
So that's the thing. However, I can share the link of the academic study we've done. Because you're paying much more funding rate, if the market you're at low leverage. Basically, because of the funding rate you're paying, you're gonna get a higher probability of getting liquidated still. Because the difference you're losing on funding rate is really big. Here you see like there is basically like there is a difference of liquidation buffer of maybe 15%, but you're still paying 20% more in funding rate, right?
Absolutely. So like there's this trade-off, which is so here's where I think your guys' massive value add is. On basic, like, I forget like quote and base, but what is a quote again? Quote is the stablecoin and base is the thing, or is base a stablecoin and quote is the thing?
Yes.
I never got these terms right. Okay, which one?
Base is on the left, quote is on the right.
Base is on the left. No, that's Arbitrum. Base is on the right here. I'm kidding. So
like if you have an instrument, like
Yeah.
base is always the currency on the left.
Okay, so base is the thing that you're trying to leverage. The quote is the collateral, effectively.
Yeah.
If you are going long, yes. If you're going short, it's the opposite.
Right.
So when you
Got
short,
it. Okay.
For example, if guy, then
Yeah. Because you're borrowing
Because if
the
you're based on
stable
quote,
coin, or you're borrowing whatever you want to short and then selling it. Right.
exactly.
Okay. So the base is the thing that you want to the base is the thing that you want to get leverage on up or down, and the quote is is that right? Am I close or am I wrong?
The quote is the asset that you are representing the price on. That's the easiest way to see it. So if you have ETH USDC, then the price of the instrument is always shown in USDC. That's what quote means. It's like you are quoting a price.
Oh, got it. You're quoting the price
an
in. Got it. Okay. These are terms that I really should know by now.
Traditional market
Right.
base would be like the asset you are trading, either buying or selling, and quote
Yep.
is the medium of exchange you are using.
Base quote. Hey, okay, so it's alphabetical order. Cool. Base quote. I can remember this. All right. So I was going to say the massive value add, in my opinion, is not necessarily having the stablecoin quote, volatile base, which is it's still good, right? You still have these low interest rates, and you're probably going to be doing better in terms of what you're paying. Though you may have a high risk of liquidation. The massive value add is what you can't even do on like any real sex that I know of, or even perp dexes, which is leverage up like pairs. So have a base and quote that have a same or very similar delta, like wrap staked ETH or S DAI, and leverage that at a reasonable level while also maybe even getting paid for it. That to me seems like the clear advantage of Contango over any other perp dex. Does that make sense?
Yeah.
So if I was going here,
yeah, definitely.
could I do?
That's definitely like a big one.
What would I do here? Would I search base and quote? So it's like oh, cool. That's exactly what I want to do. Did I do it right? If I wanted to like look for leveraging ETH against ETH.
Yeah, although like I mean, like some user had asked us to add this like cross derivatives, like stake ETH, Coinbase ETH.
Sure.
But for most of the time, what you want is like just ETH on the base. Sorry, ETH on the quote, and ETH correlated on the base. So you have most of the.
Oh yeah, but I don't mind this. I mean, if we look at Fluid as an example, Fluid, you're borrowing wrap staked ETH against wrapped. I hate saying because ETH it sounds ridiculous. Wrapped EtherFi ETH. Nope, there we go. So. But still, like it doesn't really matter what I'm borrowing as long as I can click this down button and see, well, what's the best right now? And if it happens to be, it's not. But if it happened to be like CB ETH, wrap staked ETH, then that I would still want to know that. So I'm glad that you guys have both of these, even if you're right. The most common quote will be ETH, and the most common base will be some sort of derivative. Look at that. So 83%, 56%. We're gonna look into these because I totally agree that liquidity constraints are a massive issue, and I want everyone to know those particular risks when entering and exiting, while also understanding that other things like wrap staked ETH at 32%, this is a much more liquid market and a really enticing yield. And I want to also look at like, well, then what are there major risks here? Or is it really just as good as what we've been conditioned to, which is you could just go on Morpho and get this leveraged up manually, which is going to cost, it's on mainnet hundreds of dollars when gas is high. Even when gas is low, it's going to be pretty expensive. So let's talk about PT. Let's talk about point, and let's talk about the traditional loop of wrap-stacked ETH. I think this is sort of like the bread and butter of what my community is going to be the most interested in. But I mean, all of these things are probably pretty fascinating for different theses.
Hey, I'm sorry to interrupt. Just to point out one last thing on what you said on the impacts and everything. So if you see on the left there is a text box called margin. So if you put like what you're intending to trade in like USD numbers, it will automatically recalculate for you and tell you like if what you're doing is gonna really like screw up the rates. Yeah.
Okay.
One
this is
little.
This is actually nuts. So I need you to explain this, Jimmy, because I am a very slow learner. I apologize. If I'm putting this is my margin, this is just saying my collateral, not the size of my notional trade, right?
Well, this because we have to like put a similar number for everything, like a normalized value. We just put like USD, so you kind of put like what is the notional you're gonna bring in exactly. Yeah, so that's why it's named margin. So this is as if you're gonna bring 10,000 ish worth of whatever you're gonna put as collateral.
Right. Okay. Perfect. So like $10,000 worth of
you're gonna use as margin. Yeah.
PT EtherFi or PT. PT EtherFi ETH.
Basically, right? Because
it doesn't really matter which. Yeah, it's $10,000
it doesn't really matter,
of my money.
Yeah, exactly. $10,000 worth of whatever assets I'm bringing in, and then just leveraging that stuff up. This is awesome. Okay, so now the numbers changed, but I need to understand this. So what is being accounted in that numerical change? Is it slippage? Is it price impact? Or is it simply yield impact by virtue of you've impacted the interest rates?
Latter, yeah.
Okay, so this is the impact on interest rates.
Given this extra deposit, how much lower the deposit rate will be, and given this this amount of borrowing, how much higher the amount of like the interest rate will be. Just a small caveat for this one, like the only one that is partially working is exactly on the lending because of the way they compute the interest rate, but
wait, can you say that again?
Works both ways.
There, you said something exactly on the lending?
Yeah, exactly. It's a lending protocol in Optimism.
Oh, okay.
So far, we couldn't find a way to estimate the lending rate change.
Okay.
Borrowing, we do the estimation.
But for everything else, like Morpho Blue and Silo and Spark, you have it exactly right. Yes.
And
okay.
Then we have
but exactly is not exactly right. That's confusing, but I love it.
Exactly is not exactly. Yes.
Okay. Yeah. All right. Cool. So some things to consider here is that this looks really good. I will warn people listening to this: don't just ape into it, even though it looks enticing, because PT is a volatile asset, even relative to ETH, because people are speculating on the YT, the yield of this asset. If they are really bullish on the yield, the PT asset can go down in value, which can cause a liquidation or can cause your collateral ratio or LTV to get closer to liquidation. If they adopted, which I know some protocol is going to do it in the future, if they adopted something like fundamental oracles that lock you until expiry, I really want that protocol to be built. Then they could use that. But until then, do be wary of using PTs at high leverage, though at low leverage. I mean, still, I would be probably pretty happy at 73%. That gives you a 73% yield. One other thing to consider, and I think most people here probably know this because we've looked at Silo a few times, these Silo markets are pretty fickle, which means that when you are using them, they can dramatically change the rates back and forth because big depositors tend to just like bounce around in Silo a lot. So do be aware of that. But things like APX, actually, do you guys know a lot about APX? This looks like it's, gosh, I forgot the name of the protocol. It's not Apex.
Can I suggest something?
Yeah, go ahead.
It's redacted.
Can you please
redacted?
Can you please go to the strategy? Can you please go to the strategy tab instead of the trade one? So this one is the very advanced one. You can do a lot of stuff. Have fun.
But this looks so much fun. Yeah. Okay. I'll go here first. Let me take baby steps.
We have another cool feature. Like in the same way you have the estimate market input rates.
Yep.
You can like right next to it. You can also set what is the minimum ROE I want? And so if you set it, I don't know, to 20% instead of 5%,
But before we do that, can you tell me what ROE is and how to understand it?
ROE is return on equity. So it's the math you are doing in the spreadsheet where you compute the APY times the leverage effectively.
Okay, so ROE is effectively the same thing as ROE is the same thing as leveraged APR or leveraged. Well, wouldn't it be APR? Because it would. Or do you assume compounding?
Yeah, every number in the API in the UI except for rewards is always in APY because of most money markets assume compounding in the rates.
So the only time it would be a little bit off is when there are additional incentives. So here it looks like there are escrowed
incentives are APR always.
Right, exactly. Okay, so here when we see this 32%, that's going to be additional APR leveraged up.
Correct.
Okay, cool. And it's cool they use the, oh gosh, I should know this one. This is which Greek symbol is that? Is that it's one of those weird ones. X, right? X is zeta. Is that right? Is this zeta? Anyone know? I'm learning Greek.
I don't know. It's a logo, exactly.
Oh, then definitely, yeah, it is X. Let me pull up my Greek cheat sheet here. That would be zeta. Cool. All right, love it. Just random nerding out. Okay, so and then amount to invest, we do the same thing. So let's just say I don't know. We have some whales in here. I'm not gonna dox them.
This is some cool thing like for the ROE that I was talking before. So that minimum return of investment is what is gonna drive this max amount you see here. So max amount is telling you, it's also like looking at the impact on the rates, right? So if you say, I want to get at least 20% ROE, then for example, this is telling you that on the PT trade, you can only put 22.468. If you put more than that, your ROE is going to be lower than 20%.
Oh, wait. Yeah, you had me until you said, oh, max amount. I see. Okay, so max amount. If you do more than this amount, this max amount as your principal, then you will get less than the 20%. That's so cool. That's really. This is like all the things that I wish I could calculate on my own ahead of time. This is genuinely pretty remarkable. And I by the way, anyone listening, I am not affiliated or an ambassador for Contango, so I'm not saying that because they're paying me. I think this is genuinely really cool. Okay, so one of the things that people are a little bit wary on is, well, what about leverage slippage? Because there's entering costs and there's exit costs, and these tend to be pretty impactful. So how can a user who wants to leverage in a way that they're being mindful of what the potential entrance and exit slippage might be on their position or on the strategy?
So we do show that information, but a small caveat there, in the sense that because the spot trade comes from up to 15 or 20 aggregators. Including the big ones like Kyberswap, 1inch, Enso, LiveFi, you name it. So we scout through all of them when you are about to trade, and we pick the best. Now,
cool.
I want to show you the market impact. The best reference I have at hand is the Oracle price that the money market is using to value that instrument, that asset, effectively. So we do show a market impact, and for some correlated assets, we show even how many days it will take you to break even at the current rates. But it's very important to note that this is Oracle price versus your spot price. And oracles sometimes are far off. The PT ones can be 3% off sometimes. Yeah.
I've experienced this when I was working with Somalia. That the oracles can be wrong, effectively, off by some percent. This is often because oracles, even Chainlink oracles, update on a cyclical basis, which can be sometimes as long as 24 to 48 hours, which is, or even 12. So there's there can be a difference between the actual price you'll be getting on the market and what the oracle price says you should be getting.
Correct, and this is also important because this affects. If you had opened a position with us and we show an unrealized P&L, what we are using is the Oracle price at the moment to value that position. And if the oracle is off from the actual market price, then the PNL could be slightly off. We are working
Right.
on
Yeah.
trying to improve that, but we cannot always have like having the market price all the time is impossible, right?
Yeah, you need to create your own oracles. It would be unreasonable.
Yeah, exactly. So at the moment, everything in the app is showing oracle prices, except when you are about to trade, that we show a green check. That means we simulated the trade, and that's what you should be getting.
Okay.
Except you get MEV or something like that.
So I want to get into simulating some trades because that's like the next sort of step here. But before we do that, I just had like a quick question, which is when there are incentives involved, whether they're well incentives or whether they're escrowed EXA incentives, is the protocol compounding those for the user, or is the protocol giving some sort of claim mechanism to the user so they can claim the incentives, or the latter? Okay, so if I were to create a position on exactly, and it's actually fascinating that exactly has so much capacity here, because I'm not particularly familiar with exactly, but now I might look at them just because they've piqued my interest with the Greek lettering. Let's simulate a position here, and
be careful there, because in the search there is a checkbox that asks you if you want to sum the rewards. So when sorting, right, there is a checkbox on the top right that says include rewards on sorting, and so.
So these either include the emissions or take away the emissions.
Correct. And in this case, it's assuming that you can put a lot of money because the emissions don't seem to go down that quickly. But if this is because the computer is considering that the total return of that instrument right now is about 35, 36%. But now, if you don't consider the emissions, then yeah.
Now, question.
It's just something to have in mind.
When I add leverage, or when I have a large size, will this also change the emissions? So like, if there's more TVL in a particular strategy, the emissions relative to that TVL will change. Are you guys also calculating that?
No. We didn't go that far.
Okay. So like right now, these emissions are just saying this is the current base rate. And if you leverage, we're just taking that current base rate and multiplying it times your leverage.
Correct.
Okay, cool. Well, I also want to point out, guys, by the way, the PT RS ETH strategy on Silo, this one is effectively fixed rate, fixed date because on Silo Arbitrum, the borrow market here is fixed. It's fixed at 20%. So this ROE is effectively fixed rate, fixed date as long as you hold it to expiry. That's one of those really cool things.
Yeah, actually, it's funny because a user was pointing this out this morning, and we already spoke with them, and like we will be shipping a fix in the UI tomorrow, probably, to actually flag this up.
Oh, cool. So
yeah,
people will know
when you enter.
Mm-hmm.
We'll show it, and we'll show potentially also like what is the expected return in money terms.
Oh, awesome.
This assuming that RS ETH doesn't have any fuck ups when
yeah, exactly. Well, I mean, RS ETH is now withdrawable, so this is a really good thing. RS ETH is unstakeable, or I don't know if is the term unstakeable or unrestakeable. I don't know. I like saying unrestakeable because it's just a fun word to say, but who knows what the common parlay is. So, I have a question for you guys. This is I've talked to a bunch of protocols before. This is super robust in terms of what it shows you, what it's calculating on the back end. And this would take like a team of typically like a team of quants or like high level mathematics to do this. Who is working on your team that you guys have these capacities and are able to show such robust analytics compared to your competitors? Again, I am not an ambassador for Contango. I'm just genuinely curious. Who are the big brains? Are you like? Do you guys have a background in something that would lend itself to this, or are you guys all just like autodidacts?
There is a mix of things, right?
I'll go for it.
Yeah, there is a mix of things, right? Like we're 6 people at the moment in Contango. Basically, you have 2 smart contract dev, someone more on the front end, and then You have my side on the business, and Mitch also on the business, and one UX. Now, for the background, the thing is like we're passionate and we come from a tech and finance background. We all work together, and we have like maybe 10 years of experience in the finance industry building tech there. Also, some people with financial engineering background, with software background, and I think our strengths comes from indeed mixing on one side like all these research academic parts and financial engineering with like top-notch devs on the tech side and smart contract dev, and also super strong expertise on the front end for real-time systems coming from people building exchanges in TradFi and Sex crypto.
Fantastic. So I'm not going to ask you guys to like dox yourselves, but that's really, really cool information to have. Because oh, you're all docs? Okay.
We're docs.
What's your address and your social security? I'm kidding. That's awesome. That's so cool. So you're a docs team who's built a really robust tool with great analytics. This is really, really cool. And I'm not trying to like blow smoke up your butt. It's just interesting. So I'd like to go back and like actual research Apex ETH. I know Redacted Cartel is a pretty robust team. I think we've even worked with them way in the past, like last bull market. But aside from like nerding out about these strategies, let's actually try to create a position and sort of see what we can see and what other questions might arise. So it looks like PTs are clearly like the most profitable right now for a clear reason, right? People are still really bullish on points, even though points are kind of taking a hit in the narrative space. But oh man, wait. PT ETH on Silo. Oh right, yeah, a little bit less liquid market, kind of scarier. But if you're willing to take that risk, nice leverage. This is max ROE. So this is like if you were at max leverage, this is what you would get. Probably pretty scary to do that, but here max leverage 35%, you can actually get this because it's fixed rate, fixed date. PTRS ETH, PTEZ ETH is not, by the way. So don't like understand that the PTs are not all the same. Some of them are fixed bar rate, some of them are not. I just want everyone to realize that. Let's look at this one. So I'll look at APX ETH on my own time, but if I were to create a position, I'm assuming it's relatively liquid. Let's just say this is where I would put my, because my wallet's not connected. This is where I put my ETH. Also, thank you guys for letting me simulate things without having ETH or without like having to connect my wallet. That's a massive benefit that I constantly get angry about when protocols don't let me do that. Let's go 5x leverage.
Sure, this frustration.
Yeah. Okay, so 5x leverage, current price. This is the current price I imagine of APX ETH. Cool. And this is if I was depositing 5 ETH as collateral, as far as I understand. Slippage tolerance, I can edit that. That's fantastic. Estimated entry price. Okay.
Current price is Oracle price. Anyway.
Got it. Yeah.
I wanna reiterate. I'm annoying about this, but like is where most of the questions and misunderstandings come.
Yeah, so this is the Oracle price. This is estimated entry price. This is what I'm actually going to get when I enter due to slippage, price impact, whatever it might be. It looks like it's swapping through Enzo. Go ahead.
Yeah.
So it tells you your market impact.
This is where having your wallet connected would change things, because this is the quote that we get from their REST API, and sometimes it changes after we simulate. If you're trying to use Ravi, we have an issue right now where Phantom overrides Ravi and you cannot connect for some reason.
No.
So
wait, how do I disable Phantom? Do I have to? Oh, I have to like go into my Phantom wallet.
Just disable the extension in the browser, and that's it.
You might be able to just right click on it right there and disable. I think.
Okay, I'm
right click it. I think. Maybe there's like a manage extension or something.
Yeah, manage extension. Disable. Okay.
Yeah.
How did you guys know I had Phantom? Okay, so let me go over here. Let's refresh.
because we had people complaining about this. The thing is, like, we have to upgrade the whole stack of VM and stuff, and it's not as simple. But it's coming. It's coming.
Oh, cool. And then Ravi
points everything we know is broken. So. Live demos are like this.
Yes.
It's guaranteed that you're going to hit all the little things we know is broken.
How dare you? Okay, cool. We'll go back to 5x leverage. Let's do 5 ETH. This on mainnet, so you probably want to have like 5 to 10 ETH in this position just due to gas. Though honestly, gas has been crazy low lately, like single digit, which it's been nice, but at the same time, the reason it's so low is because the market conditions have just been absolutely abysmal for the past like 2 months. But what are you going to do? So here we see price impact of 0.23%. Go ahead.
Click on the switch mainnet thingy, you'll see that it's and like the call to action. Yeah. Oh yeah, of course. Like the simulation is not going to work because the simulation actually at the moment needs that you have the money. But if you had enough money, or if you put, I don't know, 0.2, you'll see that the spinner goes off again, and it will actually go and simulate with each one of the aggregator quotes, and it's going to give you this green check. So this means that we simulated the transaction, and we observe that if the transaction went to run right now, you would effectively get that price. Of course, assuming you don't get MEV or anything like that.
Right, sure.
So have it now.
And when you're using, okay,
it happens a lot of times that quotes are not good, and until you simulate, you don't see the actual price.
Now, so Rabby has built-in MEV protection. Does the fact that I'm using Rabby help here at all, or is it dependent upon whatever you guys are doing on the back end to protect users from MEV?
No. It depends on you. So using Rabby is great because you can click on the protect MEV thingy.
Love it. Okay, so
actually Rabby is our wallet of choice because the UI, the text that you have Rabby, and most of the times it also auto switch the networks for you because this UI.
Yeah, I love that.
I don't know other product that does it, but like if you have positions and things on like different chains and stuff,
yep,
you can use them all transparently. The UI will switch chains according to what you need without ever asking to.
Yeah,
you have a single workspace.
Rabby's amazing. I love that particular feature where it like, knows which chain you're on which protocol, and you can switch it very easily. Okay, so here, just to clarify, here, if I was to do, we can go back to 5 because I mean the price impact is similar, but we'll keep it here. Here it says price impact of 0.23%. Typically that's 0.23% times leverage, right? So let's just say it's a 1% price impact to enter. Is that correct? Correct assumption?
Oh, that would be that market.
Or sorry, not market impact, but like what you experience. So if you have that, like your principal. Sorry, go ahead.
No, it's correct. Like so, this market impact is 0.23. So because you are 5x leverage, it's going to be magnified 5 times.
Right, exactly. So you're effectively experiencing a 1% principal knock, and 1% if you're getting 54%, it's 2%. So 2% of a year. Gosh, I should know this. Is like 6 days, roughly 6 to. Let's just say 6 to 10 days.
It's right there, right below.
Oh, it's there.
Even
What?
For you in red.
7.7 days. Look at that. What? This is nuts. Like, again, you are really calculating all the things I would want to calculate before entering a position. Okay, so 7.7 days. Love it. And then now, but that is to break even. There's also the exit. So you should have to calculate that, but that's a whole different can of worms. So, I guess like rule of thumb, multiply this by 2 for like really, really vague and imperfect estimates.
By the way, sorry, I'm gonna reiterate this because it's very important.
Please do.
This market impact is against what we call current price, which is the oracle. But
right.
I'm pretty sure that if we were to calculate the selling of the same asset, you would get around the same price.
Right.
The entry price.
So it might actually not be this time, Stu. It might be like much less because the actual market price could be somewhere really close to here. And that's probably true because if I'm doing 0.2 and this market's even kind of liquid, like even $100,000 of liquidity, I'm probably not actually having a 0.2% price impact on this, which is also explains why if I did 5, the price impact looks the exact same because it's just saying like you're just not going to have a price impact. It just is the case that the market price is 0.23% above the Oracle price at the moment.
Yes.
Awesome. Love it. That's fantastic. This is very cool. So I know that I've sort of been like asking a bunch of questions and not really giving you guys much time to explain things that you're excited about. So what am I not looking at yet? Like what are the most exciting strategies that people really like here? We could also do stablecoins. How could I look at stablecoins? Like if I wanted to do stable stuff, what would I do? Oh, right here.
On the
USD
on the
rates.
bar at the top, yeah.
USD rates. Okay, and let's just say let's go crazy, right? People are still think it's a bull market, and I also think it is. I think that narratives are slowly shifting, and like right now might be a good time to buy the capitulation, and like accumulation. But who knows? I could be totally wrong. But people are definitely interested in stablecoins now, as they've lost money on their longs. So let's look here. This is nuts. This is crazy high. SUSD die on Morpho Blue. However, this doesn't seem right. So I was looking directly on Morpho, and I saw rates that did not look so forgiving. So let me pull up what I'm seeing on Morpho, and then we can explain if there's any miscommunication.
You could do it in Contango as well. So if you search for the same instrument on the trade screen, we surface all the interest rates and stuff that we use for the calculation.
Oh,
maybe open a new tab so you don't have to go back and forth.
Okay, I'm gonna go to Morpho. I'm also gonna do Contango again, and we can compare these things. So launch app. Wait, this isn't Morpho Blue. Is there a way to get to Morpho Blue from Morpho? I'm sure there is.
This is Morpho Blue.
Okay. That doesn't say blue on the URL. Okay, so here we see DAI SUSDE, which is the SUSDE market.
Now you would need to go to the borrow screen on the left button.
Yeah, on the
There we go.
left.
All right, SUSDE. Here we go. SUSDE DAI. And so this is utilization. This is the bar, right?
Go back to Contango.
Yes,
Yeah, but you have to go back
right.
first to Contango to know which one you're into, right? So this one is the 94.5%.
Liquidation LTV. Okay,
yeah,
got it.
Exactly. Yeah,
Love
you
it.
have to find this one.
So this, I thought this was is this utilization or is this the, okay, 94. So this is actually not utilization. I was wrong. This is the max LTV, liquidation LTV. Perfect. And this says 11.74%. And so my understanding is that the current SUSD rate is that 15% or is it 12%?
You can see it in Contango. So if you go to the tab that I asked you to
yes.
open.
Yep. I opened it. Trade screen. Okay.
And then in the drop down search for like the PT, it's gonna be PT. SUSD whatever, like the typing it is SUSD DAI. Yeah. So now in the ticket, if you expand where it says Morpho Blue 94.5, so on the right hand side.
Yep.
Yeah. So if you expand on that thingy.
Oh, this is incredible. This is really cool.
The rate of SUV is like 15 something. Yeah.
Okay, so 15.8 and 11.7%. Okay, so now let's us do our own math as I was once called the calculator guy many years ago. Let's go 15.8, 11.7, right? So we're going over here. We're going to go borrow cost 11.7, whatever it was, and then 15.88, I think it was. Let me get these exact numbers so we hopefully get the same numbers. 11.76. Let's go 11.76. Max LTV, what was it? 94.5? 94.5?
We limited a bit, but yes.
Okay, yeah. Well, holy cow, look at that. 86.67. That's awesome. Yeah, and of course you should limit it because it would be ridiculous to open up a max LTV. Because this is liquidation LTV. They don't let you go to liquidation LTV, right? There's some liquidation buffer?
They do because like
okay.
doesn't distinguish liquidation LTV from max LTV.
Right, like Euler used to do. Euler used to allow you to go all the way to your liquidation LTV if you wanted to.
What we do?
Put 94, I think, to find the same number, I think.
What we do is, for any protocol that doesn't differentiate those two things, we put an arbitrary 2.5%.
Just okay, so
we don't let you open
92%. Oh, oops, 90%. Okay, so I'm getting 63.26%. You guys are getting max leverage over here would be 61. Yeah, so we're like identical. This is incredible. And 11.46%. So the 11.46% though, that's based off of
sorry, we're not looking at the right one. You have to come back to the other one at 94.5.
Okay.
That's the first one, right? No, sorry. Go back to the trading one, or this one if you want. Yeah, that's good. Remember, we're looking at the 94.5% LTV, and this one is the 91.5. You see it.
91.5. Okay, so you're actually taking 3%?
No, like
3.5? Go ahead.
You're mixing like the two markets. So initially you were taking numbers from the first box, which is the
This one, 94. I see. Okay, yeah. I was looking here over here.
And that
So
says
this
that
is
it reached a
94.5.
level of 1743 is what
Right.
is being used for the computation, which is around 91%.
No, or 93.
Probably like,
No, that would be like 93.5. Yeah, no, 94.
A bit more.
94.2. Somewhere around like 92, 94.2.
Yeah.
Okay, so all right. Still
By the
very
way,
cool.
Your calculator is showing 82, and us we are showing like 70 something.
Right.
This is because we are computing the impact on borrowing the amount of money that you would be borrowing.
Yeah, like I said, you guys have built the tools that I want to build, but I can't, which is so fascinating.
It's possible with a spreadsheet to do that. That's the thing.
Yeah.
We need to scout the chain to get all of this.
Don't tell me what's possible with a spreadsheet. No, but you're totally right. All right. So, so this is really cool. Thank you guys so much for explaining this to me. Now I'm going to let you guys have like the last 3 minutes to talk to me or walk me through anything else that you think I should be aware of. I know there's also points, so we can look at points or matic staking.
This is something where we do a lot of math that nobody else does, as far as we know. So we are going to tell you for each amount, like we default at 1K, but you can type whatever. And we are going to tell you how much this is costing you and how many points of each kind you are getting per day when you open the position.
So I should click create a position to look at these?
It's right there.
Oops, I'll go back.
It was there.
It was already there.
Because the value you typed was exactly 1K, so it never refreshed. So like if you just type something else, like yeah.
Let's go points. Let's do 1,000 again, and so here.
More,
So here, what I'm seeing is for $1,000 invested, it's saying $2.2 and it's in green. So am I getting $2.28 a day?
You're getting $2.28 a day, and you are getting 82,150 sats.
Oh, I see. Right. So
look at like the
Go ahead.
Like for example, the WEETH ones on the bottom right, you'll see that if you were collecting the EtherFi points,
right,
and directly the Eigenlayer points, this is going to tell you, okay, this strategy is going to cost you, I don't know, that one is 84 cents a day, but you are getting 40 Eigenlayer points and 33,000 of the EtherFi ones.
This is wild. This is like a wildly good product. Who? So I have to ask.
A little test.
Who are your audits?
Yeah,
Who did
you? Just put a little bit like more than 1,000, just so you see it refreshing like automatically. Yeah.
10,000. Yeah, love it. Yeah. Who like what did you guys do for security? Who did your audits? Where are you at the audit layer? What does security look like on this protocol?
So most of the audits are done by ABDK. We also have the integration with Compound was re-audited by Open Zeppelin because it was part of the grant. And now we are working with a third auditor that's checking some of the new features that are coming.
So you guys are really no joke. Like those are big hitters in the auditing world.
Yes, I just don't want to missell anything. Like ABDK look at the whole thing.
Yep.
And then like the other two auditors are looking at, well, Open Zeppelin just look at the compound specific contracts, and then this new guy is looking at some specific contracts. But yeah, all in all, it's like we have many eyes on it.
Genuinely appreciate the honesty here. It's refreshing. So, and often the more honest a protocol can be, the more confident they are in their product, which I really like. So here, I guess I have a last question, which is when token. I see Contango points up here. I'm imagining you guys are building points up for people who use your protocol. Is that right? Which is, I don't know if you guys are allowed to say. I know different protocols have different, what are the points for on Contango?
right now you get points through trading or through community engagements. And
does trading
obviously-
include just like leveraging up a position?
Yes.
Okay, awesome. And if you
Yeah,
have,
as long as you trade during, so at the moment we distribute 1 million points per week, and this is shared between like all the traders in a given week. So if you have an open position and you don't trade, you don't get points. But if you trade, it will accrue points to you. And there is a guide on our Medium, which is like the road to the Contango launch, which explains all the rules you need to know to collect points.
phenomenal, amazing. So I would love to ask you a bunch more questions, but I think somehow we're already out of time, which this is coming out by really fast. And I do have a meeting right now, so I have to go. But I would love to pick your brains more about the potential future token, what the tokenomics look like, what the distribution looks like, what, if you guys had early investment, what that looked like. Hopefully we can do this again in the near future once I familiarize myself with this protocol a bit more, maybe even use it, and would love to have you back on.
That would be our pleasure. Don't hesitate to schedule that.
Well, thank you guys so much for joining. And for everyone else, have a wonderful rest of your day.